Hello subscribers and welcome back to my channel. No advertisements, no drama, no promotions. Let's get straight into it. Today I wanted to share with you why I personally think this is a great buying opportunity in the stock market right now and where the biggest opportunities are. All I ask in return is for you to stay with me for the next few minutes, and if you do find value, hit the like button so that we can spread this to more people. As I mentioned, my hypothesis is that this is a great buying opportunity. And I'm going to show you some charts to back up that hypothesis. So let's get into it. Before I get started though, I want everyone to understand two basic terms. Number one is the PE ratio, and number two is the forward PE ratio. Now, PE ratio in simple terms means how much an investor is willing to pay for every dollar of earnings that the company makes. Now, PE ratio is measured in two different ways. There is something called a trailing PE, which is all about the past performance. The other one is called forward PE, which is all about a company's future performance. Now, when you are talking about the trailing PE, you are talking about the price of the stock compared to the earnings that the company made in the last typically 1 year. Whereas when you're talking about the forward PE, you're talking about the price of the stock as it is today compared to how much the company is expected to earn in the next year. So with PE and forward PE in mind, let's get into the charts which backs up the hypothesis that I made earlier that this is a great buying opportunity. These set of charts show you the forward PE ratio for the S&P indices, which are the S&P 500, S&P 400, and S&P 600. Now, for those of you who do not know, S&P 500 implies the index which tracks the 500 largest companies in the United States. Similarly, S&P 400 is the index which tracks the 400 mid-cap companies in the United States. And the S&P 600 is the index which tracks the small cap companies in the United States. Now, this is where it gets really interesting. If you look at the PE ratio of the S&P 600, which is the small cap companies, the current PE ratio of all these companies on an average is 11.9 as of 25th of May, 2022. If you look into this chart, one of the most interesting observations is that to find such a time back in the past, you either have to go back to 2020 during COVID, to where there was extreme fear, or go back to the Great Recession in 2008. Now, this tells you that this is one of the best times to start looking into investing into these small cap companies. Similarly, if you look at the S&P 400, the average PE ratio of these companies is 12.2, but as you can see, this is not the worst in the past compared to the COVID times and the Great Recession times when it actually went to almost an 8, right? Similarly, for large cap, the average PE ratio is 16.7, which dates back to about this time. But again, as you can see, during the Great Recession, the values of the PE ratios of the large caps were again down to about 10. So what this tells all of us is that the biggest opportunity that is there in the market today is in the small caps, because these are the stocks which are beaten down the most and are probably oversold compared to the mid caps and the large caps. Now, one of the things worth noting is that whenever the large caps fall by 1%, the mid caps would fall by 3%, and the small caps would fall by 10%. For example, if Apple goes down by 2%, you would find that things like Oatly and Palantir and other companies like that fall by a lot more because of the market sentiment, right? So one thing that is very clear is that whenever the tide turns, whenever all the fear that is in the market today starts to flip, the small caps are the stocks which will run up the fastest. And the mid caps and the large caps will run up, but not at the same speed as the small caps, which screams a buying opportunity for me for the small cap companies today. Now, we are in a very dramatic macroeconomic situation around the world. We have too many variables in the market today. We do not know if there's going to be a recession or not. We do not know if the real estate crash is going to happen or not. We do not know if inflation is going to steadily slow down or not. We do not know if the Fed is going to be very hawkish or very dovish in increasing or decreasing the interest rates. So there's a lot of unknowns in this market right now, but what I personally believe is that you cannot control these factors, but what you can control is the fundamentals of the companies that you're investing in, and not stay on the sidelines and wait for the market to bottom or to start running up before you start investing. So if I was to summarize, what we are saying here is that the PE ratio of the small cap companies is dramatically lower than the PE ratios of the mid cap and the large cap companies at this point in time, which screams a buying opportunity for the small cap companies compared to the mid and the large. Of course, small caps have their own risk. For example, if you were to go in a recession, some of these companies might go bankrupt. We don't know, we don't know any of that. But what we do know is that the recession that is probably going to happen, if it happens, is probably not going to be as bad as the financial crisis back in 2008. That's my personal opinion. Regardless of that, the fact that I can buy these small cap companies at these valuations is something I just can't let go. So yes, I've been buying a lot of small caps over the last couple of months, and I'm keeping some money on the side. And every time the small caps fall by 10-20%, I deploy more money and just dollar cost average into these amazing companies with amazing fundamentals going into the future. So with that said, I hope you found value in this video. If you did, please smash the like button, subscribe to this channel if you like this content or this type of content, and I'll see you in the next one. Peace.